Welcome back to our trading course. In the first lesson, we'll talk about the financial markets and why they are such a big deal. Now we are going to dive deeper and explore the different types of assets you can trade. Sounds fancy, right? But don't worry, we will help you with our trading courses and it will make sense once you get the hang of it. When we talk about assets in financial markets, we are talking about anything that you can buy with the potential to make a profit. From traditional stocks and bonds to things like forex and commodities. Each type of asset has its own quirks, different risks, different rewards, and different factors that influence their prices. Let's start with stocks. You've probably heard of this. They present ownership in a company. When you buy a stock, you're literally buying a small slice of the company. The cool part, if the company does well, the stock price can go up and you can sell it for a profit. If the company does not do well, the stock price can go down and you end up with a loss. On top of that, some companies pay dividends, kind of like a bonus for holding their stocks. Share prices move based on things like how well the company is doing, the economy, or even how people feel about the company. This is securities. When you buy a bond, you are lending money to a company or government, and in return, they pay you interest. At the end of the bond term, they pay you back what you lend them. Bonds are usually less risky than stocks, and they also tend to give lower returns. The price of bonds can move based on interest rates, how trustworthy the issuer is, and even on economic conditions. Have you ever exchanged currency for a trip? Then you are already participated in the forex market. Forex is where people trade currencies like dollar for euro or pound for yen. It's the biggest financial market in the world, with trillions of dollars traded every single day. Why trade forex? Well, the value of currencies changes constantly, and traders try to profit from these movements, but it's worth noticing that traders can also incur losses. Forex prices are influenced by things like economic conditions, interest rates, and geopolitical events. It's also one of the most volatile markets. Now, commodities are a bit different. These are physical things like gold, oil, or wheat. Commodities are fungible, meaning one unit is exactly the same as another. Commodities can be traded on the spot market for immediate delivery, or on the future market if you want to lock in a price for the future. Future contracts are actually how a lot of people trade commodities without ever owning the actual physical stuff. ETFs. ETFs are kind of like a basket of assets. They hold a mix of things like stocks, bonds, or commodities, and they trade just like a stock on an exchange market. What's great about ETFs is that they give you diversification. You get exposure to multiple assets in one trade. The price of an ETF depends on the asset it holds and market demand, making them a flexible option for many traders. Lastly, let's touch on the cryptocurrencies. Digital currencies like Bitcoin and Ethereum. They are decentralized, meaning no government or bank controls them, and they are secured by cryptography. Their price can be super volatile, and they are still relatively new to the financial world, but they gain a lot of attention. Cryptos are influenced by supply and demand, market adoption, and regulations that vary from country to country. So, these are the main type of assets you will come across in the trading world. Each has its own characteristics, its own risks, and its own abilities. Whether you are into stocks, forex, or even commodities, understanding the basics is key to make smart trading decisions. Remember, with us you can trade these assets exclusively as CFDs. In the next lesson, we'll dive deeper into one of these asset types. But until then, take some time to review, and I'll see you in the next video.